China's retaliatory tariffs stir stock market turmoil, a new chapter in the US-China trade war. Big news this morning. China just announced that it's imposing even heavier tariffs on US goods, raising them by a huge 50%. This brings the total tariffs on American products heading to China to 84%. This move comes right after President Trump decided to push ahead with his previous threats, placing new tariffs on Chinese goods, which now total 104% in tariffs. As expected, the stock markets have reacted quickly, with futures dropping across the board. What was shaping up to be a mixed day for markets has quickly turned into a rough one. As the US markets get ready to open, investors are bracing for another wild ride. And it's not just US stocks that are feeling the pressure. Asian markets have also taken a big hit due to these new tariffs. This move is part of China's broader strategy to use its economic influence. China has options to buffer its economy, such as boosting local consumption or strengthening trade with other regions. There is also speculation that China might look to flood the European market with more goods to avoid some of the tariff pressure, further complicating the situation. The timing of China's announcement is also notable, as it was made just before US markets were about to open, likely to maximize market volatility and ramp up pressure on the US economy. Meanwhile, across the Atlantic, the European Union is working on how to respond to the US tariffs on steel and aluminum. EU officials are currently voting on their countermeasures, being cautious to avoid economic damage to their own industries. For example, imposing tariffs on European alcohol could have a significant impact on the EU. The global economy is on edge as this trade war continues, with markets in both Asia and Europe already feeling the effects. While the US is at the center of the storm, it is clear that the ripple effects are being felt globally. Analysts warn that this conflict is likely to disrupt supply chains, causing industries to scramble to adjust to the new tariff structure. As the trade war progresses, experts agree that the global economy is in uncharted territory. The pace of change is rapid, and with no clear end in sight, things are highly unpredictable. Supply chains are already being reshaped in real time, as companies look for new trade routes and partners. It remains unclear whether this will lead to lasting economic shifts or if a resolution is on the horizon. For now, attention is focused on China and the US as they continue this high-stakes economic conflict. American consumers are likely to feel the first impact. The question remains, will this trade war result in a new balance of power, or will it escalate further, potentially pushing the global economy into chaos? As the situation unfolds, both investors and consumers are preparing for a challenging economic period ahead.